Kevin Paffrath. What up?
Tether's latest black eye is a CFTC fine about lying about its reserves. Oh my gosh. The one thing that I've constantly talked about with cryptocurrencies that make me nervous is the reserves that underlay stable coins, because especially if you think you're farming a yield and you have this currency as a savings account essentially, and all of a sudden you're earning a yield on things like Tether or USDC or whatever, Gemini, and this money's actually being lent out and you're not aware or fully aware or comprehending that it's fully lent out when you're accepting these yields, then the underlying reserves become even more of a concern, because if the reserves cripple, then the lending market could cripple, and you could see some big ouchie wouchies in the crypto market, which a big ouchie wouchie in the crypto market that's now worth, that has exposure to $7 trillion worth of equities, including Square, Tesla, and others, Visa, MasterCard, JP Morgan, and so on. You could really hurt the market. And that's why regulators are paying attention to things like Tether right now. And so look at this. The biggest stablecoin issuer has been hit with a $41 million penalty, and Bitfinex has been fined $1.5 million. Tether will pay $41 million to settle allegations that it lied in claiming its digital tokens were fully backed by fiat currencies, putting a major compliance headache between the world's biggest issuer of stablecoins, even as regulatory scrutiny intensifies. Not a surprise to see this at all. The Tether FUD was all over the place, and it was not wrong. Remember, fear is different from fake news. I say that because sometimes we hear FUD and we just kind of write it off as fake news. But no, FUD stands for fear, uncertainty, and doubt. And it makes sense that there's fear, uncertainty, and doubt because there are red flags. And what do they say when there's smoke, there's fire, right? Anyway, for years, Tether told customers in the broader crypto market that it had $1 in reserve for every token. However, the Commodity Futures Trading Commission said Friday in a statement, well, that's what they said in the statement, reiterating that. However, the claim was wildly misleading, according to the agency. For example, from June to September of 2017, there was never more than $61.5 million backing Tether, even as roughly 442 million coins were circulating at one point. No way! Oh my gosh, that's 61.5 only represents 14%, folks. 14% backing on Tether. That's horrible in 2017. That's horrible. I mean, that goes way back to 17, but that's not a good reputation. 14%, and you're saying it's 1-to-1? That's very dishonest. This case highlights the expectation of honesty and transparency in the rapidly growing and developing digital assets market. I completely agree with that. I mean, I personally think this is the kind of regulation that we really do need. If companies are telling us, hey, don't worry, our stablecoin is backed 1-to-1, then prove it. And make it clear to people with proper disclosure that if they're getting a yield, their money's being lent out and that they do not have claims to the underlying asset. That's the big thing. People think, even though I'm getting a yield, oh, it's okay, it's backed 1-to-1, I could always exchange it for $1. No, you can't if you're taking a yield, because then it's being lent out. Tether is widely used to trade Bitcoin and other tokens, making it pivotal to the crypto market. That's because the coin allows quick transactions, largely immune to volatile price swings as a function of its 1-to-1 peg. But many traders have long been skeptical that Tether genuinely had money backing the coins it claimed. More recently, the Treasury Department and other federal agencies have been alarmed by the stablecoin's dramatic growth. There are now Tethers worth about $69 billion in circulation, prompting concerns that crypto market disruptions could trigger chaotic fire sales, right? This is basically what I just described. In its enforcement action, they say Tether failed to disclose what they were holding. Especially, yeah, this is the other thing. They have a lot of, here, look at this. Unsecured receivables, which are like promises to repay cash, and non-fiat assets, which could in theory be other cryptocurrencies, which is weird because like if Tether is backing its coin with other Bitcoin, that would be odd, right? Or a lot of junk bonds potentially. Like there was a lot of fear when the Evergrande crisis happened that Tether was investing in Evergrande junk bonds. Turns out they weren't, or so they say, and so some of that fear was sort of alleviated for Tether. Falsely told investors it would undergo routine professional audits to determine that it maintained 100% reserves at all time, but in fact, Tether reserves weren't audited. Until at least 2018, Tether manually kept tabs on its reserve levels, a process that wasn't updated in real time. Tether didn't admit or deny the Commodity Future Trading Commission's allegations, and Tether agreed to resolve the matter in order to move forward and focus on the future, the company said in a statement posted on the website. Bitfinex also hit, and this follows a February settlement between the New York Attorney General, Bitfinex, and several Tether affiliates of hiding losses and lying that each token was supported by $1. Then the companies together agreed to pay an $18.5 million fine without admitting or denying claims. Okay. Treasury officials are preparing to release reports on stablecoins. That's going to be interesting, that report. I'm excited for that. And the GME report. I'm looking for that one. And officials are also discussing whether to launch a formal review by the Financial Stability Oversight Council into whether or not the tokens pose a systemic economic threat. I think they probably do pose some form of systemic threat. Again, $7 trillion, even though the crypto market's like $2 trillion, because there's so many stocks, like companies, right? Companies that sell their shares on the stock market that have exposure to crypto, whether they're miners, whether they're, JP Morgan, Visa, whatever, trying to transact, right? Like Square, Cash App. These are exposures. Even public, where you could get a free stock worth all the way up to $70 by going to medkevin.com/public. They're exposed to crypto as well, right? A lot of private equity also exposed to crypto. NFTs, lots of this. Liquidity crisis in crypto would be pretty bad for a lot of things. But anyway, Tether is a key focus of government scrutiny. Don't forget, also, though, you have things like USDC and the Gemini dollar that have a lot of similarities. Maybe not as much as Tether, but still, the fact that it's being lent out is still a similarity. But anyway, that's interesting on Tether. Fascinating. At least now this kind of puts this behind us, though, which is good. Hopefully now we can go forward with a cleaner slate. But anyway, in the meantime, thank you so very much for watching. Check out the programs linked down below on Building Your Wealth. Get that 41% off coupon code before October 29th. Make sure to get your free stock with Public, worth all the way up to $70 by going to medkevin.com/public. And folks, we will see you in the very next video. Thanks so much. Goodbye.
Like and subscribe. Bye.